Eduardo Burattini. Welcome to this analysis of S&P 500 and Nasdaq for October 21st, 2025. We just came from a completely bullish day, a truly remarkable and positive trading session. Break time equals 0.5s/, as you can clearly see, starting from yesterday's session, specifically Monday, October 20th. We first experienced a significant gap up at the open compared to Friday's overnight close, indicating strong buying interest. Break time equals 0.5s/, and basically, the entire day saw a totally upward development in price action, demonstrating sustained positive momentum throughout. This allowed us to steadily and progressively recover the crucial area where the significant short position from Friday, October 10th, so basically 2 full weeks ago, had originally started to materialize. Break time equals 0.5s/. This particular development means several important things for market participants. Obviously, as we had already observed and analyzed in some of our previous analyses from earlier days, the market had already built up some substantial volumetric zones, which, together with the necessary and powerful push from the order flow, allowed the market to effectively settle and gradually recover this macro market movement, having completely and successfully ruled out the possibility of a continued short. This had already happened from the absolutely crucial level we've mentioned several times, which was 6,650. After a brief series of sessions in distribution, basically in balance, but always confirming support levels, yesterday finally saw a unidirectional move that brought us very close to the key technical levels near the all-time high, which is above 6,000. In fact, the all-time high is at 6,810, and we got to within about 20 points of 6,800 around technical and definitely important level, being so close to the all-time highs. We can see that all of this, in yesterday's session, happened not only as a practically immediate rejection of Friday's low after, of course, the closing level was tested overnight, but also through a continuous exchange of order flow, which was, for the most part, positive. Saying it was only positive isn't technically correct, but the order flow was predominantly positive, with continuous buying pressure. Any absorption that occurred during yesterday's session was immediately, let's say, subdued by the strength of the buyers, who kept pushing and thus kept creating new highs. Obviously, in this phase, the market maintained a consistently bullish directional structure. The close, therefore, can in every respect be considered a trend day, maybe not in the most classic sense, but with all the characteristics of what defines a trend day. Obviously, as statistics and market dynamics would suggest in these circumstances, the session closed exactly at the highs. The close happened right near the highs, and the market did all this by re-accepting what had been an old area from just a few days before the 10th, specifically, if I remember correctly, the session on the 8th. If we go back and check, of course, what does this mean? The market built all of this by clearly leaving behind an acceptance area, and this is quite evident in the gap it left between 6,763 and 6,555, so this low that I'm marking right now, here it is. In fact, the market rebuilt, by gap, I obviously mean between one acceptance area and another distinct acceptance area. The market essentially constructed this as if it wanted to leave this area immediately behind it, while still being supported by volumes. We can see this because, clearly, at the close, near the closing area, we have a normal distribution, absolutely in the upper part of what was yesterday's session. Obviously, this is outside the acceptance area, which is gradually shifting around the price and has, of course, accompanied the price up to yesterday's close. Obviously, All of this was created and accompanied by continuous large bullish trades, which is a clear sign of undeniable strength from the buyers, but also of an order flow that has clearly provided support. This evidence continued to leave several vol analyzer zones, each one following the other in progression. Okay, basically this means one thing. First of all, we've reached some interesting support levels. Now, I would say not quite at the level of supports considered as resistance. We're in a bullish trend. So let's look at the resistances. I would say not yet, because if you look at the bigger picture, you'll notice there are several signals of fairly significant short movements, pretty strong short pressures that have entered the market right at this level. It should be noted that this is a situation from several days ago, and that yesterday the market already showed signs of wanting to push forward quite consistently. Just think about this area right here. This potential resistance zone was clearly broken through with great strength, as you can see from the big bullish trades, and then it turned into support during the retest of the level, or more accurately, a pullback in this situation. So, it's definitely a market that's showing total strength and still has more to give. The first particularly important structural level is exactly what we see here, an old, untouched weekly value area high, which falls right at 6,807. So, I'm definitely going to wait for a possible price reaction around this area, or at the very least, we'll be monitoring this area during today's session for any signs of either acceptance above it or rejection of the area, which will obviously need to be confirmed using order flow tools. But there's something else to mention in a situation like this. In any case, a market that has expanded a lot in a completely bullish day is likely, especially if, in the early stages of the European session, things slow down a bit. Since there would be a lack of the substantial volume and participation typical of the American RTH session, we could easily see the price start to retrace a bit and fill this small gap between an old value area and the last value area left yesterday. So, there's a perfect confluence with this specific level of long pressure indicated by the volume analyzer, and this is what determines the most interesting area to watch for the S&P. Which is 6,700 in the area around 6,750, the most interesting area where a potential hold could happen. All the more reason for the price to be given the right momentum to continue its upward run. Obviously, this is an area that's also supported by another aspect that I'll show you right now. If we look at the market profile, we can see that right here at the bottom, where the market built what was the value area low of yesterday, we have what is technically called a ledge. Okay, so a step, let's call it that, a slightly less technical term. Sorry, a step that definitely forms a solid wall that was put in place. So, the price was never able to gain acceptance immediately below this wall, as if it had created a sort of threshold above it. There's a lot of acceptance, but immediately below it, there's almost zero acceptance. Now, these ledges generally act a bit like small poor highs or poor lows. So, generally, there's the possibility that if the market moves back close to these levels, they might be tempted to break through, and this could be a reason not to look for retracements that are too shallow, okay? We should pay close attention to the price if it gets to this area, because 6,760 could actually face an attempt at a bearish breakout. But, aside from this situation, what we can definitely say, going back to the charts, is that ideally, the 6,750 area would be the best target for a potential retracement of this kind, among the best, not just because of this evidence, which should only serve as a clue and then be filtered with other evidence, and this could be one of them. Certainly, The 6,750 area would provide the best retracement level to watch during the day for a possible continuation of the S&P in an obviously very bullish context. And for this reason, it also serves as a local line in the sand for the day. Let's take a look at the situation on the Nasdaq. As for the Nasdaq, you can see that we're in an almost identical situation, except here we've reached not only the all-time high from which the whole drop started 2 weeks ago, but you can also see that on the Nasdaq we've already reached its most important resistance area. So, even in this case, we can say that the Nasdaq definitely showed more strength yesterday, even relatively speaking compared to the S&P. And this certainly adds another variable to this analysis, because we see that this 25,320 level also coincides with an intraday level that we absolutely have to consider today, because it's a level that comes from the TPO, based on what was created yesterday here on the Nasdaq. However, we see a slightly different situation here. The two value areas were coming from the one built yesterday and the one built in previous days are actually contiguous, so there's not that small gap that we saw on the S&P. What does this mean? It means that, most likely, if we don't manage to break through and accept above the 25% level right before the open, so probably during the European session. I want to emphasize the if here. In that case, we could see a somewhat deeper retracement, which could ideally bring us to the most important confluence area around 25,220 to 25,200. So, close to what was yesterday's new high of the day, but more importantly, it should bring us into this area here, where we can see there was strong pressure from the vol analyzer, obviously bullish pressure, which helps us identify what could be the descending line of the day, as well as the most interesting retracement level. It's worth remembering that on days like this, we've said it several times, even in previous video analyses, thanks. At the end of trending days, it's always important to monitor any potential breakout that might occur above the previous day's high in a positive trend, or below the previous day's low in a negative trend, because generally this is one of the most important levels for the entire session. So it makes a big difference whether we actually get the retracement before the breakout, or the breakout first and the retracement after, because in the first case, we might have a support zone, so if the retracement comes before the breakout, the support zone could definitely be much stronger. On the other hand, if there's an attempted breakout that gets rejected, then the support zone might lose some of its value. That is, it will still remain one of the most relevant levels of the day, but the reaction is likely to be a bit weaker, of lower quality, precisely because it was already touched before, which could bring in new volume and new pressure to the market. Obviously, this analysis is intended purely for educational and informational purposes and should not be taken as a public investment solicitation or as an incentive to take a position. I thank you in advance for your attention. For those who are Volumetric Live and Volumetric trading clients, I'll see you later in the VLive session that we do twice a week with real-time trading. Thank you all for your attention, and I wish you a great day in vid trading.